While you're reading this disclaimer, don't forget to subscribe, tap that like button, and check to make sure your shoes are tied. Don't want you tripping, right? Hey there traders, and welcome back to this next video in the Futures Basics series. We are finally in Unit 2. This is the first video where we're going to go over market structure and how it works. So again, we're going to go into the structure of the futures market specifically, and understanding how this market is set up is crucial for navigating it successfully. And before I go in deep here, just want to give you a quick reminder, if this is the first video that you randomly found on YouTube, if you are watching this on YouTube, click the link in the description to get access to the free members area, so you can get access to all of these slides and every one of these videos, any PDFs, guides, checklists, any other resources that I have available for this entire course, as well as notifications of free live trainings, so you can watch over my shoulder while I live trade. So again, click on the button in the description, access our free members area, and you get all of this. So jumping right in, where to trade futures markets. Now, typically this is done with stocks on different exchanges, like the New York Stock Exchange, the NASDAQ. Futures is CME, which is Chicago Mercantile Exchange. Again, that might be the most prominent, but like, you really don't need to know exactly like all sorts of like all about the ins and outs of all these different exchanges and everything. I do have a particular brokerage that I like to use, which I'm sure I'll put either in the description below or as a resource in our free members area that I just mentioned. But ultimately, this is where the futures trading needs to actually happen, is on an exchange. Again, you'll have access through a brokerage to the exchange, but long story short, these exchanges connect buyers and sellers around the clock, meaning you can trade futures nearly 24 hours a day. Nearly, right? And again, futures is my number one trading instrument. Again, to see how this differs from Forex, options, and others, check out the YouTube channel for a bunch of other videos, and I recently did a video on this in the last unit as well. Now, the futures market has a variety of participants, each playing a unique role. We've got hedgers, like farmers or manufacturers. They use futures to secure prices in advance, shielding themselves from any price swings in either direction. Now, there's speculators. Speculators, on the other hand, trade futures to profit from the price changes. And then finally, there's retail traders, investors like you, maybe me, who participate on just a smaller scale, as far as that goes. Now, an essential part of the futures market structure is that for every buy order, there must be a corresponding sell order. And this is what creates a, quote, net zero balance. Again, there's no net increase in the number of contracts that are out there. It's just an ongoing exchange of positions. Okay, so understanding this structure of being net zero, where there, for every buy order, there's a sell and vice versa, is going to help you see how futures markets operate smoothly and why they're a reliable trading environment. Okay, so again, this is just very, very, very basic, but again, we need to make sure we cover this as we look into more unique features of being into futures trading in and of itself, which is the cash settlement, which we'll go into here in the next video. So again, click on the next video and we will see you then.